Cash Out Refinance with 500 credit score coming up. Hey guys, I'm Adam Lesner, and my oxygen is getting borrowers approved for a mortgage when other lenders say that it's just not possible. Today we're talking about Cash Out Refinance. We're talking about getting approved with as low as 500 credit score, and I'm going to dive into 3 different ways to get it done. Let's take a look. So doing a Cash Out Refinance with 500 credit score can be a challenge, but it's not impossible. There are many benefits to tapping into your home's equity, and it's not just restricted to borrowers with flawless credit. So today we're going to cover everything you need to know about getting approved for a Cash Out Refinance with 500 credit score. So can you get approved with 500 credit score on a Cash Out Refinance? The short answer is yes, but there are a lot of caveats that come along with that and conditions that need to be met. So the 3 programs that you can use to get approved are an FHA loan, a VA loan, and a NonQM loan, or some people call them portfolio loans. So everything I'm covering is for primary residents only. So let's dive into each one of those products. FHA loan. This is probably the most popular product if you're looking to get approved with low credit. Well, FHA offers some of the most competitive rates and has some of the most flexible guidelines from an underwriting standpoint that you'll find in terms of credit, debt to income ratio, and loan to value ratio. So if you're below 640 credit, the rates aren't quite as good, but what's nice about FHA is that you can apply for a streamlined refinance down the line once your credit improves. So this gives you the opportunity to accomplish your Cash Out Refinance goals now and do a simple streamline down the line once you're back on your feet in like 6 or 7 months. So things to keep in mind: 500 credit score is a minimum. You can borrow up to 80% loan to value. You can't have any accounts in dispute on your credit. There's some exceptions, but just if you have disputed accounts, just take them out of dispute. You must not have any 30-day late payments in the last 12 months. And as a borrower, you must have owned and occupied the property for at least 12 months. In addition, you need to be within the FHA county loan limits. I'll include a link in the description so you can check your county loan limits as well. And everything I'm covering, I'll include a link to everything so that you have access to it and you can come back and reference it. So an FHA loan is a fantastic route to take if you have low credit and if you're looking to take cash out. So next one, VA loan. So to all of the U.S. Armed Forces of these United States, thank you for your service. Semper Fidelis. Eligible veterans are able to tap into their home equity up to 90% loan to value. So for some reason, there's a misconception among many veterans that you can only use your VA loan once. That's absolutely not the case. You can use your VA loan benefit unlimited number of times as long as you have available entitlement. And I'll include the link for you can check your entitlement. So what's even more amazing is that similar to FHA, you can apply for a streamlined refinance, what's called a VA interest rate reduction loan, once you get back on your feet and you get your scores up. So things to keep in mind for the VA loan if you're doing cash out: minimum 500 credit score, borrow up to 90% of your home's value. Free and clear properties, sorry, they're not permitted. You can't do a cash out refinance on a VA loan if you own your home free and clear. You must have made at least 6 payments on your current mortgage. No 30-day late payments in the last 12 months, and this is for primary residents only to do a cash out refinance down to 500 credit score. So a refinance on a VA loan is a wonderful way for our nation's veterans to accomplish their homeownership goals, hopes, and dreams. And let's go to last but not least, looking at a non-QM loan. So prior to COVID-19 pandemic, these alternative types of loans, you could go down to 500 score. In the current COVID world, they're doing them as low as 550. I'm going to dive into them. Portfolio loan or non-QM loan. So for this type of product, you can expect higher costs, higher rates, but there's some major benefits to a non-QM loan that you won't find on FHA or VA. Things like you can have multiple late payments in the last 12 months on a non-QM loan, and bankruptcy is okay in the last 24 months. You're not going to find that on FHA or VA for a Chapter 7 bankruptcy. And foreclosure is okay in the last 24 months on a non-QM loan. So a ton more flexibility. It's a great short-term fix for short-term circumstances, meaning get your goals accomplished now refinance into FHA or VA or conventional down the line once you get back on your feet. So it's a great way to get it done now. Let's talk about like why even do a cash out refinance. The main things is for like a debt consolidation, home improvement, or paying off debt, or paying off derogatory debt. For debt consolidation, like use the equity in your home to consolidate unsecured debt, like high interest credit cards and personal loans. By paying down your revolving debt, your credit score will increase over time if you keep the available balance below 30%. Consolidating your debt into the mortgage often saves borrowers hundreds of dollars a month and has a major positive impact on their budget. Next thing, home improvement. So if you've been putting off, getting things in order around the house because of high expense, a cash out refinance is a perfect opportunity to accomplish your home ownership goals. But if the house is in major disrepair, the appraiser is likely going to flag it as needing to be done prior to closing. Just a heads up. Last but not least, paying off derogatory debt with a cash out refinance. Having delinquent debt lingering on your credit for years can weigh heavily on the conscience and limit your options when seeking financing of any kind. So a cash out refinance is a great way to get a fresh start and pay off the stuff that you've been trying to get around to, like collections or tax liens or judgments and stuff like that. I want to give you a bonus tip for accounts in dispute. If you have accounts in dispute, save yourself some time by getting the accounts out of dispute prior to submitting your loan application. When you have an account in dispute, the credit bureaus remove that debt from their credit score calculation as if it doesn't exist. So since that debt is being ignored, the scores are artificially high and inaccurate. Lenders typically want your accounts out of dispute and have credit repulled after the dispute is removed in order to accurately get a credit score for you. So in summary, getting a cash out refinance is a great opportunity to do the things you've been wanting to get to do. There's never been, I don't think, throw me a comment if you disagree, I'm not sure there's ever been a better time to do a cash out refinance. Values are insane. We don't know how long this is going to last. So we might as well take advantage of it while we can, while there's equity, and do what we need to do. So thanks for stopping by. I appreciate your time. Please don't forget to subscribe and leave me a comment. Let me know what questions you have. Reach out at balanceprocess.com or just shoot me an email at adam@balanceprocess.com. We'll see you next time. See ya.